Welcome to Let's Talk Investing, a co-production of the Globe and Mail and the Investor Education Fund. I'm Rob Carrick, personal finance columnist at the Globe and Mail, and with me is Steve Garmaise. Steve is Associate Director at the Foundation for the Advancement of Investor Rights, also known as FAIR. Steve, you're an investor advocate, and I'd like to pick your brain on what investing products out there you think are good. What are some good bedrock financial products for investors?
We like simple, transparent products that are easy for investors to understand.
Okay, give me some examples.
One of the ones, and FAIR is not in the business of recommending investment products, but speaking as an individual here, we like simple exchange-traded funds, and the emphasis is on the plain vanilla funds, the ones that passively replicate large segments of the market.
You mean like the S&P TSX Composite and
Yeah.
the S&P 500? There's many ways to invest in those indexes and in the stock markets. What particularly is good about those for investors?
I have no particular preference for the ETFs over a passive index mutual fund. We really think it's important in that investors have very little control over what market returns are going to be, but they do have a fair amount of control over what their costs will be. And that over the long term, if you're paying 0.2% instead of 2.5%, that extra returns is something that you're going to need to finance your retirement over
So low
time.
fees are an advantage. Is that an advantage investors should look for in all products?
I believe it is, not exclusively, and I do believe there is a value to paying for advice, but people should know what they're paying for and know what the products are that they're dealing with.
Speaking of paying for advice, I know that you are a believer in the fee-based model of financial advice. Could you explain to us what that is and also why you like it?
The fee-based model is a relatively small portion of the financial planning world. I believe that most Canadians do need help in seeking financial advice. The world is complicated and getting more so. So people do need to turn to financial advisors. The problem with much of the system today is that most people have very little idea what they're paying for the financial advice, and that the advantage of a fee-based system is that you go to a financial planner or advisor in advance. He doesn't get paid off of commissions. He's charging you a fee in order to come up with a financial plan.
And that's a fee based as a percentage of your assets.
Typically, that will be a set fee, not based as a percentage of your assets, but a fee based on.
Oh, you're talking about a set dollar value.
Yes.
Okay, so that I would call sort of the fee for service model, whereas fee based is a set percentage of your assets. Now, last question. I really think that the fee for service model is a great one too, very transparent. But how do investors find advisors who practice this way?
It's not that easy. It's only 8% of the total base of advisors today who offer that, and I think you have to look around, ask in advance. There's nothing wrong with the other model if people are aware of it and aware of the potential conflicts of interest that their financials have.
Okay, thanks, Steve.